All right, y'all. So a quick video on using the simple EMA strategy in order to help you gain profitability when it comes to trading. So now a lot of people have a lot of bad things to say about indicators, which it is what it is. But my philosophy is whatever works for you works for you. If it helps you with your patience, your discipline, as well as confirmation and confluence, then use it. But you just don't want to clutter your chart. You want your charts to be nice and neat and simple for you to read. But I have nothing against indicators. I don't care what anyone is saying. I have nothing against indicators. You can couple indicators together as a confluence piece with ICT, with smart money concepts, with support resistance, supply and demand, with any strategy. So any strategy that you use, as long as you have discipline and patience, that strategy can be profitable. So with that being said, let's get started. So the 50 EMA is pretty much, the strategy is pretty simple, straightforward. It's coupled with two or more different steps applied to it. So if you are a trader who is struggling when it comes to entry, you could use the 50 EMA as an entry tool. And so right now what we're looking at, the 15 minute time frame for micro gold futures, because as you do know, I trade futures. I also trade Forex and whatnot. I can trade any chart. So that's the beautiful thing about understanding the charts, is once you understand how to read the charts, you can trade pretty much anything. All right, so let's get down to business. So for the first thing you need to understand when it comes to applying, let's say, a 50 EMA or any EMA or any indicator to the chart, you need to understand price action first. So the first steps to the strategy is to understand market structure and understand how price moves. So we want to focus on market structure. And with market structure, we want to understand the market structure shift. And what do I mean by that? If you haven't watched any of my other videos, or if you haven't watched any other videos on YouTube, a market structure shift is pretty much a confirmation that the market is reversing. So let's draw a quick something quick here. If I can find the arrow. All right. So everyone know when the price moves, it moves. Why is it on purple? But it moves something like this, right? So if it's going up, it looks like pretty much upstairs, climbing up a mountain, and so this is pretty much an uptrend. So this being an uptrend, that being an uptrend, is pretty much saying anytime it dips, it's time for you to put your buy in order to catch the trend. So this is trend-based trading, right? Hold on. So that's considered trend-based trading. So and conversely, let me do this because we are so used to the colors in this industry. If you look at something like this and it looks like downstairs, what does that tell you? Then that tells you, instead of an uptrend, we have a downtrend. And this is considered a bearish move, right? Why is this? Okay. So here we go. So now this is just the basics of market structure before anything. So just understanding that this is how price moves within the chart. So for the uptrend, it looks like an upstairs. For the downtrend, it looks like downstairs. And with the uptrend, you can take advantage of the trend moving up anytime it dips. So when it dips, it gives you a discount opportunity for you to get price at a lower value, in order for you to take full advantage of the market continue to push up. Same thing with the downtrend. If you are selling, you're going to sell when it's high, and the peaks give you a chance for you to sell at the highest price, the premium price, and then sell off into discount. So with that being said, this is pretty much market structure 101. This is just the simplest breakdown of market structure, right? So, and then we also have, just for context, we have something like this. And that can go on forever. This is ranging. This is when the chart is ranging. And with that being, we're gonna call this range / consolidation. I think I spelled that wrong. Of course I did. So range / consolidation. And with that, that's pretty much when price is not giving you a specific direction. It's just going up and down, looking like a slinky, a 2D slinky. And I never even realized that. But yeah, it looks like a 2D slinky. And this is when you want to stay out of trades and you want to wait for a breakout. But for the most part, this is market structure. So like I was saying before, the first thing you want to look for is understand market structure, and look for what we call market structure shift. And what that is, for example, if this is going up, if we have this uptrend here and we have it running up, and it all of a sudden, if it does something like this and it fails, I love these diagrams. I love drawing this stuff. But and it fails to continue to go high, and it creates for the buy trends, instead of create higher highs, it create a lower high, and it failed to break the previous high. This is considered a market structure shift, right? So this right here, that's considered market structure shift. So that's considered a market structure shift. And with that, that'll give you the opportunity to put in sales, and it's going to end up looking like this, right? It's going to end up looking like that. So this is a reversal pattern. You have the market structure shift, and you have the manipulation. You know what? Let me start like this. So now you have the market structure before the actual shift itself. You want to have a market manipulation. So let me backtrack. Market manipulation. So that's the market structure shift. I think I went a little bit too fast. So what we want to look for first is understand market structure and the reversal of the market structure itself. So if price is going up, once price fails to go up and it creates this market structure shift, this is considered the manipulation I don't have to type it, do I? Y'all don't need me to type it. But anyway, this is considered the manipulation, right? So this is manipulation, and then from the manipulation, you have the shift. What tends to happen is within here, for those who are more advanced and understand how this stuff is, you'll see some kind of order block. It reject off an order block somewhere around here, but that's a different story, a different topic, right? But for the most part, what we want to focus on first is market structure, understanding where the price is going first, and then waiting for the market manipulation. And from the market manipulation, we need a market structure shift. Now, from the market structure shift, once you see that, you'll start seeing, if you put this EMA on there, is if you need help with entries, if you're not sure that this is going to come down, you'll just put the 50 EMA on top of the chart, and the EMA will literally overlap around the market structure shift, and that'll give you the indication to enter. So you could just use the EMA for entry after the manipulation into the market structure shift, and that'll give you that clue. So the EMA will look something like this. What tool can I use for that? All right, let's do the arc. We could possibly do the arc. Smiley face. Let's do the arc. If I can find the arc. I just saw the arc. Alright, so let's do the arc. So let's play with the arc. So what would happen is something similar to this, where the EMA will cross over like that. So now when the EMA cross over, you'll see something like this. Something like that, where there's a rejection on the EMA, or even it can go a little higher and come back down into it, and that's another confirmation that you can take another sell for it to come down. So that's all it is. It's a simple strategy. It's nothing crazy. So if you do it for same thing for the downtrend, right? So first we understand the actual trend itself. So we understand the trend, and once price fails to continue to go down and it creates a higher low for the downtrend, this is for bearish plays for downtrend, and it creates a higher low, then that's indication that price is going to start reversing. And same thing, so this is what's considered a what? That's considered a market structure shift, and from there you can take a what? If you're unsure of if you want to enter or not, or when to enter, you could just wait for the cross of the 50 EMA. You can wait for that cross, and you don't necessarily have to enter here. I mean, this is a very nice area to enter, because that's the very beginning of the actual reversal of the trend. So these are the very beginning. Where the manipulation happened is the very beginning. But do not blow your account trying to chase the reversal itself. Wait for price to do what it does. So wait for the market structure shift, and then wait for price to actually cross the EMA. And if you want to be even more conservative, you want to wait for price to come into the EMA and reject off of that, and then you could use that for your buy or your sell. So now let's look at the chart. So now when it comes to consolidation from ranging, you don't really want to play with all that until it breaks out and it gives you a direction. So it can do something like this, but it can still always come back down. So you just want to make sure it start giving you an actual direction, uptrend or downtrend, because you don't want to be in a position where you keep on putting trades in and closing, putting trades in and closing, and you blow your account all within the consolidation. Because it has happened. It happened to me in the past before, where I'm going up and down, and I end up blowing my account just within this consolidation before it even breaks out into an actual trend. Now, coming back to the chart, let's put this into action. So first, you want to train your mind to actually see manipulation. So now, in order to do that, this is what I do. Well, it's not what I do. I've just been trading for a long time, so I see it. So anytime I see a range or a zone broken but traded back into, then I know it's manipulation. So for the most part, you can just kind of follow the trend, and you start noticing how price, this previous low was confirmed, but price did not make a lower low, and it came back down. And this is a higher low. So now you know that the actual trend reversed. So understand the trend reversal. What would this be considered? I don't even know where it's at. But what would this be considered, guys? I know you're looking like, what do you mean by this? But what would this be considered? A market structure shift. So now, if I drop the EMA on top of that, the EMA crosses right over it. So I like my EMA green, but I could just put it black for you guys. Now the black is not working. Let's make it red for you guys so you can see it clearly. So now notice when the market structure took place, the EMA was crossed. So now that's the third step that is needed for confirmation that this is going to start running. So if you did not catch it down here, it's fine. Right? It's fine if you didn't catch it down here. On the lower time frame, you probably would have. This is a 15-minute, but on the lower time frame, and we could even experiment to see that. We can go to 5. Right? So if you look at this here, on a lower time frame, you probably would have, because this is still the previous low. Failed to break the low. A higher low here in the EMA cross, and then you can run it up. But to be on the safe side, you want a clear move. The higher the time frame, the better. So once this happened, right, once it crosses the EMA, you want to make sure that it respects that EMA. So it crossed the EMA and it failed to break through that EMA. It respected it, and we could just take our buy and we could run this buy all the way up to the previous zone up here. Right? So that's pretty as simple as it can be for you to use EMAs as a confluence piece when it comes to price action, manipulation, market structure, order blocks, and just pretty much anything. Right? So now if you take a look, this will give you a nice entry point as well. If we go down to a lower time frame and we look at what's going on here, and we go to the 5-minute, for example, you get a nice entry point at the bottom right here, and then you could pretty much run that up. So that's pretty much the strategy. It's not tough, but the thing is, this is the thing. If you're gonna follow this strategy, if you're gonna follow any strategy, you need to stick to only that strategy. So in order for this to work, you need to be patient. You need to wait for the manipulation first. Let's say, for example, right here, price manipulated, right? How do I know it manipulated? It went up for the buy, it came back down, but it failed to break the previous high. So this is manipulation. So that's confirmation. So that's confirmation number 1. Then we have market structure shift, which is confirmation number 2. And then we have the EMA cross, which is the third confirmation, and we can just take it going down. So this is pretty much you waiting for price to manipulate and for the market structure to take place. Once that market structure shift takes place, you just use the EMA, 50 EMA as your entry. And it's just that simple. It's not that hard. Even right here, this was the most recent one. I took this trade coming down earlier today. But let's see. This is the most recent one. And look at this. This is a clear manipulation up the top. You can use this high, that high, whichever high, but a high was broken. So the high being breached. And just to make sure you can see this, because I know some are visual learners, which is nothing wrong with that. So I'm gonna make sure you can see this. Price is going like this, it start going up. I need this to be darker. Not that dark. And it start going up, but then when it started going up, it failed to continue to go up in order to confirm the buy trend, and it created a low. So it created a low down here. It created a low, but the high that was created after the low was created is lower than the previous high. So that just means that now whenever there's lower highs and lower highs, whenever there's lower highs and higher lows, then that's considered a buy trend. I mean a sell trend. So with that sell trend happening, and just so you can see the difference, what you start seeing here is now all you have to wait is for what do you have? You have what? You have first the manipulation. That's a big circle. The manipulation, and then you have the market structure shift, and then the EMA cross, failed to break over, sell, and you have a nice trade into this order block down here, and which is a totally different topic, so we're not going to go into all that in the gap right here. But yeah, so we take profit down here. So that's a lot of points when trading futures, when just using a simple strategy. Just remember, your strategy do not have to be complicated. Don't let these people online make you feel like you're slow. I know individuals who are millionaires, rich, and they're just trading support and resistance. I know millionaires who are rich trading supply and demand. You don't have to trade all kind of fancy stuff. You can keep it as simple as possible, chart as clear as possible, however you understand, because what really matters the most is that you stick to your trading plan and that you have your discipline and your patience. You're not over trading or over leveraging, and that's really what matters the most. So like I said before, any and every strategy can work. This is the EMA entry strategy, and you can use this, add it to whatever confluence, or if you just don't want to use indicators, that's fine too. That's, you know, your prerogative. You do whatever you want with your life. I'm just trying to make your life a little easier. But but anyway, thanks for watching. Please like, share, subscribe. If this was helpful, subscribe. Try the strategy out if you feel like it's something that you needed help with when it comes to entries, and let me know how it goes. And remember, I'm not a financial advisor or anything like that, so I'm not giving you advice for you to go gambling or anything like that. This is for educational purposes only. Academy of Charts. Until next time, love y'all. Peace.